Hey, hi everyone, and welcome to our monthly webinar. So we're in September now. So who would have thought, Aaron, that we're already, through into September?
Very scary.
So a bit of housekeeping as per always. So today's session will be recorded and all attendees will be sent a link to the recording. All the previous recordings are available on BGL's YouTube channel as well. Please ask any questions that you do have into the Q&A panel. We've got several BGL team members, Chris, Andrew, and Lynn signed in. We're happy to answer those, and then Aaron and I will come and answer any questions that we do have. So format, if you haven't joined us before, I'll cover a bit of a BGL update, and joined as always by CEO and co-founder of the Smarter SMSF, Aaron Dunn. Aaron, welcome.
Thank you, Jeevan. Good to be here. So, yeah, there is actually just chatting beforehand to go, it does seem a bit quiet at the moment, is it a calm before the storm? So there's a couple of things that have been going on. So I'm going to talk a little bit about, most importantly, the ATO's recent update to the tax ruling on when a pension commences and ceases and what it means on the document front as well.
Excellent. Okay, so what I'll cover today in terms of the BGL update. So we've got a few updates over now post our tax releases. So on the 11th of July, obviously 1st of August, 22nd, and we've got a release coming out on the 12th of September. Okay, move across. So the first one I want to chat about is around digital signing. So obviously BGL integrates with DocuSign, FuseSign, and Adobe Sign in terms of digital signing. So this particular feature here, which I'm not going to actually demonstrate, but just wanted to mention, was just particularly with DocuSign. And so this allows, and it does seem when you first announce it, seems to be counterintuitive, but it does allow you to utilize DocuSign's features in terms of digital signing, but in person. So this was requested by a number of firms who would like to utilize digital signing in terms of operating a paperless office, but had clients that came in to their office and they wanted to basically get them to sign on a device such as an iPad, etc. there in front of them, and everyone to receive those agreements. So if this is something that you'd like more information on, it is available there in our help documentation. And if you'd like more information, I guess, around digital signing and how that works within Simple Fund 360 or Simple Invest 360, just reach out to your account manager, or log a support call with BGL, and a member of our team would be more than happy to take you through that process and explain how it all works. Okay, first change there within Simple Fund 360 and Simple Invest 360. So we've now updated the support call interface. So if I jump across there into Simple Fund. Okay, so obviously login support calls found over here, sorry, on the phone icon. So clicking on that will bring up this brand new, obviously, look and feel. So what we've done is improved also the help which takes place. So you can actually go and utilize our help. And this will search both our help desk, our help guide stuff in terms of, say, Zendesk, go through and actually search. And we'll also search BGL's community where people have done posts as well. So you'll see the links there on both those left-hand sides. Obviously, if that requires to be able to log a support call, please go in and enter relevant information you need to. Just like to point out also, which was something added maybe 12 to 24 months ago, you do have the ability to upload the files there at that same point in time before you actually obviously go through and log the support call. So as I said, like, give us feedback on that if you're finding the search could be improved, or if there's any information there that could be made better, or that process made better, please let us know. Okay, next one there is merge contacts. Okay, so I'm gonna go down onto the contact screen. Okay, so obviously with the contacts, especially over time, we've got a new ability now. We added probably over a year ago now the ability to find duplicates within your list of contacts, but we didn't obviously provide the ability there to I suppose, merge the two together. So in terms of finding duplicates, you've got the ability to match on both name and address, or you do have the ability to match on name only. So you can see the first one I have here. Obviously, it will here and demonstrate where the I suppose the two are. It'll show the relationship, so that's in terms of who that particular contact is attached to. And I suppose that could be which entity, where, you know, I suppose where within those entities they are gone through and linked together. So you'll be able to see that. So you can see this particular one where they're actually matched through. And then you're able to select which one you'd like to keep. And obviously, as you expect that once you merge it through, it'll actually remove that old or the one that you don't have, and this allows multiples and actually go through and repeat. So this one's obviously, I've got to fix a few of the relationships there, but obviously once I fix those up, it'll go through and obviously update those. So again, you've got the ability there to match those on name and address or name only. Go through and complete those. So it allows you to keep those lists up to date, especially where you've built up a lot of duplicate contacts over time. There's no mandatory reason to duplicate, to remove duplicates either. So if you do have, I suppose, multiples of contacts, I know there's some valid reasons where in some cases, you would like a contact with a middle name and a contact without a middle name, and things such as that. You can still feel free to maintain those. If you are connecting through any of our practice management integrations, such as our ability to sync clients and contacts through with the likes of, say, XPM, MYB Practice Manager, APS, etc., it is obviously recommended to go through and do the duplicate process first to actually removing duplicates within Simple Fund 360 and CAS 360 if you are using CAS as well. So obviously before you actually turn on the sync integration, because it'll just cut down the amount of work you have in terms of linking the duplicates, I guess, together as such. Again, if you need any help with that, please reach out to the team. Okay, next one's around DRPs. So if I go across here into, into corporate action screen, I've got one set up here. I'll set that one. Okay, so down here in terms of the corporate action process, something we've added now is the ability where, I guess, the shareholder, so it doesn't matter what the entity type here is, where the shareholder has selected for any of the excess residual amounts from a DRP to be given away to charity. We've now created those default accounts there in terms of the chart of accounts, and you do have the ability to process the amount that you'd like to actually either come through as a refund or the amount that's going through as a donation using those two fields there. It won't automatically pre-fill those. You will need to, I guess, manually enter those into the screen. And obviously that will be processed through into the relevant tax returns, depending on the entity type of obviously an SMSF trust or company. Okay, a couple of report updates that we've done. So just a reminder, obviously, for all the entity types now, if I go into that first, in terms of the tax returns, there is, for 2024, there is a new trust income schedule. So this was something I covered in the last update, but I'll just go over that briefly. So this is for any investment that receives trust income. So basically it's posted to, I'll go back to here. So in terms of, say, an SMSF, anything where income is, wrong in there. Anything where income is posted to label M there in terms of the income section, the gross trust income, that you will obviously need to have that prepared there as a trust income schedule. So that's really any distributions. That's anything listed, such as a managed fund, ETF, etc., or any unlisted trusts, managed funds, etc. as well. Doesn't matter what the type is. If you are, just a reminder, if you are processing wraps or platforms into Simple Fund 360 and you entering that in as a single line item, the ATO has come back and stated that that can be recorded as a single line item within the tax return. That, obviously they've got the portfolio report to back that up, so they're more than satisfied that to be recorded as a single line item. Essentially, if you've recorded all the distribution information, either using the transaction screen or the automated tax data screen, either screen, as long as it's in Simplify 360, this will be automatically pre-populated. If you complete in the items such as the ABN, ACN, or investor number, that'll be saved against the actual underlying security and used across all funds as well. In terms of some of the changes, though, on top of that, that was obviously we released those back in, I think, May, June. There's a couple of different ones now we've added based on client feedback. So the trust income schedule reconciliation. So as the name suggests, that'll give you a nice report there to actually show you all the information that's been entered into those relevant fields, and I suppose where they display in terms of that schedule. So you'll have that relevant information there. Something else we've also done in terms of the report screen, and I suppose I've looked over time, was in the past where you were preparing a report pack and had items such as the annual return for an SMSF, and you also had the relevant schedules. You had to select those individually, and obviously for something like, let's say, the trust income schedule, if that wasn't being populated, you'd have to remove that on a fund by fund basis. We've now added this particular one here, SMSF annual returns and schedules. So when you do go through and print the actual annual return here as part of either a report pack or standalone, it'll automatically grab all the schedules that have been populated and print those. So you don't need to look at it now on a fund by fund basis. You don't need to work out, okay, which ones are populated, which ones are not. That'll automatically go through and obviously save you some time going through that process. Okay, next one here is for similar Invest 360, and that's the ability there to process a reversing journal. So if I go through and I'll select a trust in this case. Okay. So what you do have now is the ability to enter in, I'm going to go and select, so you can go in and select, if we go the other way, let's okay, the ability to select that as a reversing journal. And what this will do is when this particular journal here will process on the date you've entered there. But if you'd like to reverse out at a future date, so it might be year end, quarter end, month end, etc., you do have the ability there on the top right hand section to automatically input that information that it is to be reversed out, and the system will automatically process that corresponding journal on that date for you. So it just saves you a bit of time in terms of processing those year end or quarter end journals where you do like them to be, I suppose, reversed out. Okay, so in terms of the key features that they're the ones that are that were so going through there. Couple others now here in terms of what's coming soon. So the first one there is open banking. So I've got a nice video here that I'll play whilst I'm talking over. So for open banking, anyone that hasn't heard this concept before, so it is, as it says there on screen, a government initiative. It is governed, as it says there, by the ACCC. So it's a particular standard that if I go back and so just pause that, it'll go back and it's governed in terms of relevant industries. The ACCC obviously mandates it, and it is mandatory for every single bank in Australia to be part of this particular system. The process itself, what it means for BGL is that currently, if we'd like a direct data feed like we have now, let's say in terms of the major four, the good example is someone like Suncorp at the moment. We've been chasing Suncorp for years and unable to get a direct data feed from them. As part of the open banking system, every single bank in Australia needs to be part of the system. So it means we can get data from those particular banks. We've partnered with a company called Scripps. So Scripps and a company which is accredited under the ACCC. And that means that they pass all the security requirements, etc., that are needed as part of this particular system. And you'll see as we go through. So this is something that will be obviously part of our bank data service. So if there's no additional cost in terms of this, apart from if the entity is part of our bank data service, you can utilize that. Obviously looking at it against the current direct data feeds, so those direct feeds, they're not going away, they'll remain in place. But this means that BGL will get access to every single bank in Australia. It'll be the same authorization process for every single bank, and I'll show how that works in just a second. We are able to get historical data back to 2018 for any open accounts. As mentioned on the next point there, we get access to both open and closed accounts, which is a great thing. The closed accounts, I believe the data will only go back potentially to 2 years though. And also generally it will support all bank types. So, you know, the general rule of thumb is any of the accounts that the client sees when they log on to their internet banking, that should form part of obviously the open banking system. So that includes things like term deposits, credit cards, and loans. What's also in place at the moment in terms of the government is legislation for non-banking accounts. So that's the likes of something like Latrobe, where they don't hold potentially a banking license, but they, you know, or Afterpay or something like that, where they still are likely to get part of data. So in order to set up open banking, you'll go through the same process that you'll go through our feed management screen. Obviously the BSBN account number can be entered in, you know, prior to this. And rather than selecting our bank data service, you'll select open banking. What this will do is the authorization process for open banking is all done online. So Simple Fund 360 or Simple Invest 360 will generate a unique link that you can send to your client. So that can be sent either via email, or we will support the ability to text that through at a later stage. Or if they are obviously in the office and you'd like to do it, you know, face to face, that link can be opened automatically at that given point in time. So that link that you do send through, you'll obviously be able to, the best option is obviously putting it through and yourself emailing it through, because it's obviously more trustworthy that it's an email coming from yourself rather than an email that's sent by BGL from BGL in terms of their trust. So then they'll receive, when you actually click on the link, it will take you through to Script's interface, as you can see here. On this interface, you're able to select multiple banks. So obviously all the different institutions that they do bank with, they're able to select, obviously where it is relevant. Then they'll go through and they'll agree to the consents that go through into this place. And then depending on the bank, so this is where it might vary slightly, is they'll need to enter in either their internet banking client ID or client username, or their mobile phone number, and that really depends on the bank. The bank will then send through a two-factor code. So the bank will never ask them to input their phone number. So in this case, I've got obviously CBA, and that'll send through a code either via their internet banking app or via text message. So I guess the preface to this is the client must be registered for obviously internet banking and have the ability to receive two-factor codes. So there might be some pre-set up for some of these. Once that process goes through, they can select which accounts, so all the different accounts that they can obviously access, and part of that will display there, and then that will go through and obviously complete the consent. The data will come in automatically to BGL, as you've seen before, in terms of all the transactions, balances, things, as we do go through. And obviously, you know, if they are selecting multiple banks, they will go through and repeat that process for each individual bank as we do go through. For some business accounts, there is a pre-consent process, which we will explain. I probably won't explain here, but we'll go through there at that later stage. Stands there. So we have developed in the process of developing a wind-up wizard as well. So that wind-up wizard will obviously guide you through the process, as the name suggests, where the fund's being wound up, making sure that you completed all the correct steps, that nothing's missed, and they're correct, obviously completed in the correct order. Transaction recode function. So we're continuing work on that. And you'll see the next phase rolled out in the next couple of months for that as well. And we want to get that to the phase or the stage really where every single transaction, doesn't matter the type, etc., can go through that transaction recode function. Okay, so that's everything I'll cover. So I'll pass over to Aaron now.
Yep, I think that's good, Juben. Yes, thank you. Make sure I can get the click screen. There we go. All right. So as I said at the beginning, the main area that I wanted to touch on today from a technical standpoint is that we have seen the ATO update their guidance around when a pension commences and ceases. So I call this the Bible of pensions. So, and it's all the requirements around what we must do when we establish an income stream. And then it also looks at the circumstances where a pension will cease. And we know there are multiple ways in which a pension may cease, whether it's exhausted, the capital's exhausted, we may fail the minimum pension obligations, it may be in respect of the death of a member, it may be through commutation and the like. Now, what we hadn't seen since the 2017 reforms was that ruling updated to incorporate a lot of those transfer balance cap measures and total superannuation balance, all those sort of elements that we saw from the 1st of July 2017. But what was interesting that we then saw included into this updated ruling was a revised view by the Commissioner on circumstances where the pension standards are not met during the income year. So in what circumstances would the pension standards not be met? Well, the most common one, as I had alluded to just before, is when the minimum pension wouldn't be taken, but that would equally apply in circumstances such as a transition to retirement income stream where the maximum is breached as well. So what's always been important to understand is a tax ruling only looks at the implications from an income tax perspective. So if we look at the bottom left-hand side of the screen here, what we have known for some time is that if we fail to meet the minimum pension in a particular year, then the pension ceases at the start of that income year. And we lose any claim for exempt current pension income that was supporting that particular income stream. Okay, so if it was the only member in the fund, then effectively that entire fund for that year goes back to the accumulation phase. The other part to this is that not only does the pension cease at the start of the year and there's a loss of ECPI in respect to a retirement phase income stream, all benefit payments that are taken are therefore treated as lump sum payments, not as pension payments for the year. And it does become even more problematic in respect to transition to retirement income benefits because we don't actually have allowable lump sums and it therefore becomes illegal early access, and those amounts would be treated as payments to that individual as ordinary assessable income with no offsets or anything available to them. And the final piece to that puzzle is from a transfer balance account reporting point of view, we need to effectively have that pension ceased at the end of the year, and we'd have to commute and then repurchase that from a T-bar perspective in that subsequent year. All of those elements ultimately fit under the income tax rules. But when we looked at the SIS laws and in essence trust law, which is going back to our SMSF deed, the ATO really didn't have a view on what would occur if we had pension documents in place that was effectively a contract, and the contract between the trustee and the member to say, well, what happens if the pension ceases? So what happens if we don't actually take the minimum? We know from a tax perspective that the pension is to stop and all the elements that I just spoke to, but the pension ostensibly could continue and reset itself from an ECPI point of view in that subsequent year. Now, what the ATO, and that was, I guess, reading between the lines for sake of a better word, is the current view is now abundantly clear. And they've got this, the references in paragraph 20, is that the breach of the payment standards, so where we don't comply with the rules of that superannuation income stream, it means not only do all those income tax elements occur that I spoke about on the left-hand side, but a breach of the standards will ensure that the fund cannot simply re-establish that pension or continue that pension for ECPI purposes. It formally requires that pension to stop and then repurchase. So that is a fairly profound difference from the old version of the ruling to the current version that we now have. And this ruling was updated in around June this year. So when we go and have a look at this further as to understanding why, the ATO makes this very clear. And you can see this within the compendium that came about regarding the questions that were asked from the original ruling up to this current ruling. And the reason is the ATO says when we look at the SIS regulations, it states that the rules relating to a pension must ensure that the requirements are met. So in a situation where the minimum pension has been failed, if they have not been met in a particular year, we can no longer ensure that the requirements will be met. And ultimately that means in subsequent years. So we now will have some interesting challenges around the timing of recommencements of income streams, because we might not know that that minimum has been breached for some period of time thereafter. And then naturally that there's a decision around the commutation, and then there's a decision that needs to be made around the recommencement of that, noting we also have T-bar obligations as well. So why is this, I guess, being heightened? I raise this importantly because we do have clients now that have a normalized set of minimum pension obligations each and every year. We no longer, of course, have our previous temporary 50% reduced minimums. So there is I guess, a greater impost on the amounts that need to be taken out. The other thing I should say is that this is looking at items beyond, obviously, what is the 1/12 self-assessed minimum pension shortfall. So that still applies and is still available. But this is a situation where the minimum pension simply hasn't been met, and we don't have any other powers ultimately available to us for that pension to continue. And I do put in here, off the back of the revised ruling, the ATO has made a number of updates to the guidance that you'll see on the website. So what I've done here is I've included some of these references for you to go and have a look at further, and just to understand what the impact is of off the back of this guidance. So whether it's around the starting and stopping, which clearly relates straight into the tax ruling 2013-5. They also have an FAQs around the requirements of minimum pensions and where those exceptions might fall in respect to those minimum pension shortfalls. Like I said, that 1/12 minimum shortfall concession. And importantly as well, they've provided some updated guidance on ceasing a TRIS, and noting, of course, the fact that we do have the potential illegal early access and the treatment ultimately of the way in which that money will be assessed in the hands of the individual as well. So it's quite small in terms of that framing of what the Commissioner had spoken about, but does have a significant impact that will force for the ability to claim eCPI in the following year. You must cease that pension and restart it. And therefore, if you've got circumstances where you've got maybe multiple pensions and an accumulation account, if that minimum pension's failed, then that tax-free and taxable proportion of that income stream is naturally going to roll back into the components and maybe contaminate a lot of the strategy work that you've done. So really using your Simple Fund 360 software to maintain the balances and therefore the cash flow and the reporting requirements to your clients will become really important, because ultimately this sort of area could undo a lot of the work that had previously been put in place around recontribution strategies, multiple pensions, and the like. So off the back of that, what we've done on our Smarter SMSF platform is we've made changes to our pension rollback documents. So we now have in our forms here the ability to produce pension rollbacks either via what we call member request. So whether that's done with a two-step process, like we don't know the balance yet and then we do want to roll back, or the fact that we know the balance and we request the rollback, or you've failed the pension standards and then we are in essence making that rollback to occur that falls in line with what the Commissioner's updated views are within that TR 2013-5 guidance as well. And the other thing that we've done, not necessarily directly related to that, but we have now also rolled out our new death benefit income stream. So we did previously have in one pension document the ability to do account-based pensions, TRISs, and death benefits. The fact that we'd sort of made improvements to our pension commencement documentation over the past 12 months has meant that we needed to pull that form out. We now have that death benefit income stream available as well. So that's the non-reversionary pension. So you're starting a fresh pension in respect to it from a superannuation death benefit. We then naturally have things like payments to our auto reversionary beneficiaries available through the platform there as well. And I guess the final thing that I just wanted to let people know is that we also now have up and available via the BGL Learning Channel. Many of you will know that our SMSF Essentials course was available from within the BGL Learning Channel. We now have our BGL, our SMSF Foundations course available within there as well. So I guess we run a model of smarter, smartest, smartest when it comes to our education. So this sits in the starter mode, you know, dealing with people. You might have offshore staff, you might have new staff, you might have administrative staff that just want to understand the basics and fundamentals of SMSFs. So we have here 6 modules providing about 10 hours of education. You can see each of those topics that we work through there. Again, as you do with any training on the BGL channel, it's sort of all full mobile responsive, allows you to work through and complete this at a pace and time that suits you. And in respect to both of our courses, one of the things that we've worked with the SMSF Association about is that if you actually complete one of these courses, you will get a complimentary period of membership with the SMSF Association. So with this Foundations course, it's the affiliate membership. I say complimentary period. What happens is that on 1 April each year, your membership renewal period restarts. So if it was done today, it would effectively take you through until the 31st of March next year. So just to give you a couple of screenshots again, without going into it, as I said before, it is fully mobile responsive in an e-learning environment, allows you to really work through, or your team to be able to work through the relevant topic. You'll be hearing from, whether it's myself or Tim, through both video, audio, and as you can see on the right-hand side there, we have workbooks that cover each of the particular modules as well. And then to validate that learning, we have interactions throughout the modules, and then an assessment at the end of each module as well. And upon completion, whether it's in this course or the SMSF Essentials course, you can then access a certificate of completion that awards you the relevant CPD off the back of that as well. So we do have the ability for you to find out more on BGL's website. If you go to Smarter SMSF-courses, you'll find out more. I've just taken a screenshot there of all the different elements in terms of CPD, number of modules, duration of time you got to complete, the different, SMSF Association memberships that we spoke about, pricing, and then obviously who that is suitable for as well. So if you've got any questions, you can naturally feel free to get in contact with us, or simply go into the BGL Learning Channel and you'll be able to purchase that and get yourself underway as well.